Ladies and gentlemen, thank you to the INSG for inviting me to speak at this time. Unfortunately, I was not able to make it to Lisbon, but have sent through this presentation, which I hope will be worthwhile and informative. The topic I would like to discuss is lithium-ion batteries and look at the supply chain from mine to market. Before I do that, let me just introduce ourselves. Core Consultants was founded in 2009 as a market analyst firm specialized in commodity and commodity-related sectors. Today we have 4 main divisions, 2 of which are consultancy-based and 2 are subscription services. Core Consultants and Core Africa are our consultancy services. The former offers customized reports on advising on market access, providing feasibility and pre-feasibility studies, market and forecast studies. Then we have Core Africa, which assists our clients in defining their strategy and structure across Africa. This service has a strong leaning towards regulations and finance, and much of our work is focused on helping our clients understand the regulatory and operating environments and recover the so-called trapped cash. We then have 2 subscription services. Core Insights is our monthly report services, which provides monthly market insights on key industries. And then we have our newest service offering, Core Connect, which provides phone and telephone conversations on a given topic. I would like to introduce our core team. Besides myself, there is David Creamer, who is the co-founder and CEO of Core Africa's division. David is a former Barclays Africa principal whose strengths lie in understanding the different regulatory environments and cross-border flow of funds. We then have a group of associates. As regards Cobalt, there is John Parker, who is in the process engineer. John has over 30 years experience and has held many leadership positions, including the Deputy Managing Director of Bateman Engineering and the Deputy and then later Managing Director of S&C Lavalin. He has also worked on a number of African copper and cobalt projects, including ERG's Kolwezi, KCC and Tenke. Sophie Napier is our Associate Exploration Geologist and Business Developer. She has over 20 years experience in the mining industry, providing technical and geological expertise, and is experienced in presenting technical financial reports to institutions. The topics I would like to address here this afternoon is first, I would like to look at the key supply chain statistics governing the battery sector. Then I would like to look at the background to the lithium market, whether there is a risk that other chemistries will take the place of the lithium battery, the potential to change those cathodes, and then finally a look at the raw material sector. The lithium-ion battery market is undergoing a revival, with billions having been committed over the last 2 years and billions more to be committed over the next 5 years to expanding production capacity. We are basically witnessing the birth of the multi-gigawatt-hour production facilities, which we estimate will increase demand for lithium-ion by over 100 gigawatts by 2021. Tesla has become a household name, as it is not a traditional battery manufacturer, yet has chosen to develop a gigafactory in Nevada. The largest of all new lithium-ion battery plants is expected to come from this gigafactory. This decision has arguably disrupted 2 mature industries, causing the automotive giants, such as General Motors and Nissan, to reevaluate their positions with respect to developing electric vehicles, while also disrupting the battery manufacturers, forcing them to consider their expansion plans and increase their scale. So while the industry owes a lot to the current state that it finds itself in to Tesla, the majority of this new lithium-ion battery capacity is actually being developed in Asia and not the US. At present, around 88% of all lithium-ion cell capacity is in Asia and China in particular, and this region is expected to retain its monopoly going forward. The graph shows current projects under construction, which are expected to be commissioned by the end of 2018, and then announced projects which are expected to come online by the end of 2021. Leading the expansion is in fact China. BYD is expected to expand its capacity by 34,000 megawatts from its current 16,000 megawatts. Other significant expansions include Guangzhou High Tech, which will produce 25,000 megawatt, up from its current 6,000 megawatt capacity. Lithium is expected to increase its capacity by 17,000 megawatts, bringing its total to 20,000 megawatts, and Amperex is expected to raise its capacity by 10,000 megawatts to 17,500 megawatts. Samsung is also looking to expand its capacity in China and is already well established in South Korea. LG Chem has announced expansion of 19,000 megawatts and is expanding its Holland, Michigan cell plant to 36,000 megawatts over the next 4 years. US-based Boston Power is also focused on increasing its capacity in Asia, including China and Taiwan. It makes sense that the capacity should remain in Asia when we consider the cost differentials between China, Korea, and the US remain substantial, as we can see by this chart. Despite the fact that sales revenues of many of these battery manufacturers have been quite poor, the choice to still continue expanding means that there is a major drive to reduce battery prices, sell more batteries, and increase the utilization rates in order to justify the capital expenditure. Costs of producing a lithium cell has fallen from $1,000 per kilowatt hour in 2010 to around $240 per kilowatt hour today. And Bloomberg's new energy finance team calculates that production costs of Korean plants is actually around 162 kilowatt hours, the lowest in the world. The expectation is that this cost will continue to decline, and we are estimating that prices of cells will average around $88 per kilowatt hour by 2030. The cost of batteries is the main reason why passenger electric vehicles are more expensive than the internal combustion energy vehicles today. So the question often arises as to whether lithium cathodes may be replaced in the near term. We would say that the risk of this happening is actually negligible for a number of reasons. Firstly, the lithium battery technology is known and it's a proven technology. Sony first used lithium-ion batteries in the Walkman in the 1990s, and the fact that the public already uses lithium and is familiar with lithium-ion batteries in portable devices means that they are comfortable with the technology, it has gained acceptance, and it is not such a leap in the minds of the consumers to now go from using a battery in a portable device to a battery in electric vehicles. It has already gained public acceptance. Secondly, commercialization of a new energy storage solution takes a long time. New battery technologies such as lithium sulfur and lithium air batteries are only expected to be commercialized in 2025 or 2030, which we'll show you later. The road to commercialization is a long one. The first lithium-ion rechargeable battery was invented in the 1970s, but only commercialized by Sony 20 years later in the 90s, and then only really gained traction when smartphones took off around a decade or so ago. Lithium batteries are getting better and better as a third point. Aside from the costs, which are consistently coming down, there has been a lot of investment into research and development for these batteries, and we are seeing tangible efficiencies from life cycle perspective, from charging times, and you now get faster chargers, improvement in energy density, which has increased around 5% every single year since 1992. Given the commitment to lithium battery research, we believe that it is as a cathode, it is here to stay. There is the expectation that new cathode chemistries will come to the fore. The most promising technologies is the lithium sulfur and lithium air batteries. The battery manufacturers are not expected to commercialize these technologies before 2025 and 2030 respectively. This is another indication that the road to commercialization is a long one. The electrification of the vehicles is arguably what is behind the expectation of increased growth in lithium battery demand. Adoption of these cells in the automotive sector is seen as the Holy Grail for lithium batteries. It is the reason why there has been so much focus on costs, as having a high-cost battery in a smartphone is not such a big deal, but when one scales this up to a vehicle, it becomes considerable. The fact that target costs are now in sight and is said to be achievable is the reason why forecasts from all battery and auto manufacturers concur and are centered around lithium-ion batteries being the storage solution of choice. Currently, there are 6 main cathode chemistries being explored, 4 of which are showing promise for use in automotives. And these are the NMC battery, which is a battery based on lithium, nickel, manganese, and cobalt. The NCA battery, which should be used in powertrains, which is based on lithium, nickel, cobalt, and aluminium. The lithium titanate batteries, which is basically used in grid storage. And the other one for electric vehicles is the lithium manganese battery, the LMO battery, and the LFP battery, which is lithium iron phosphate battery. The decision to adopt one battery technology over another is not trivial, as in each instance there are significant trade-offs. The trade-offs have to be factored in when one is forecasting the potential market shares of these batteries going forward. The major criteria for an automotive battery is the following. Safety first. We have seen global recalls of various automobiles. In the case of electric vehicles, as this technology is relatively new, even a single fire could turn public opinion against electric mobility and set back industry development for months or even years. The main concern is avoiding thermal runaway, which is defined as a positive feedback loop where chemical reactions triggered in the cell exacerbate heat release, potentially resulting in a fire. The chemistries that are potentially prone to this include the NCA, the NMC, and the LMO batteries. The second is lifespan. There are 2 ways to look at this. Firstly, cycle stability and the overall age of the battery. Cycle stability is the number of times a battery may be fully charged and fully discharged before being degraded to 80% of its original capacity at full charge. The overall age of a battery is the number of years a battery can remain useful. Today it is the overall age that remains a hurdle, as with the lithium batteries, exposure to temperature accelerates the rate of aging. Performance, again this has to do with temperature. There is a reasonable expectation by the owner of a vehicle that he should be able to drive his car safely in both hot summer temperatures and freezing cold winters. To date, batteries can be optimized for either high or low temperatures, but it is challenging to engineer them to function over a wide range of temperatures. For example, performance during cold climates would rely on heating insulation, whereas those designed for hot climates would rely on electrolytes and materials that allow for those high temperature storages. The differences between these 2 battery designs is more substantial than the current distinction between, for example, hot and cold weather tires. The 4th criteria is the specific energy and specific power. A specific energy of a battery is their capacity for storing energy per kilogram of weight. Currently, the driving range is limited to around 250 to 300 kilometers for an electric vehicle between charges, which is not long enough to drive long distances across the country, but very good for city driving. Also, currently it takes around 30 minutes to charge a battery to 80% capacity. So to charge this every 300 kilometers is not ideal. Battery cells today reach nominal energy densities of around 140 to 170 watts per kilogram, compared to 13,000 watts per kilogram for a gasoline car. The specific energy of the resulting battery pack is typically 30 to 40% lower, or 80 to 120 watts per kilogram. Specific power is the amount of power that batteries can deliver per kilogram of mass. It's pretty good with current technologies. This is needed more in hybrids, which discharge a small amount of energy quickly. In electric vehicles, specific energy is more important than power, and manufacturers have established design parameters for electric vehicle batteries to optimize this trade-off between specific energy and specific power. This page summarizes the last few points quite nicely. In each instance, there are trade-offs in the properties of the major lithium-ion battery technologies. The NMC battery, based on these charts, seems to be the most balanced from a safety and specific energy perspective. In terms of cathodes, the NMC battery accounts for just under a third of the cathode market by volume today and is expected to be a mainstay in the industry. As the vehicle market starts to overtake the portable electronics market with respect to lithium demand, the NMC battery is expected to be the main beneficiary at the expense of other technologies. Now we come to the raw materials. First, we want to ask ourselves, what is a battery and what does it consist of? So we've covered that it consists of a cathode, it consists of an anode, and it consists of a separator. These three components consume a wide variety of metals. The most intensive anode component is currently graphite, while the cathode is a blend of metals based on lithium, including lithium carbonate. Cobalt is used as the additive in the mainstream lithium-ion cathodes and is critical as it acts as a binder for lithium ions and allows the ions to move through the cathode to the anode during discharge. Graphite is the largest raw material input into the lithium-ion battery cells by volume and comprises the majority of the anode. The source of graphite could be naturally mined and processed, which is called flake graphite or spherical graphite, or it could be synthetic graphite. In general, the way the graphite is produced is very different and are sold into different markets and fetch different prices. However, in the anode market, these two camps compete for the same piece of the action. At present, China produces 100% uncoated spherical graphite and therefore accounts for 75% of the anode market. The main reason for this is that China is the low-cost source of flake graphite feedstock. The ability to compete with China on cost is what constrains diversification in the graphite market. However, there is the concern that as China increases its environmental stringencies, this could make way for other players. Synthetic graphite is produced using pet coke or tar, which are byproducts of the oil and coking coal industry respectively. This graphite is typically used in the steel industry and is very energy intensive. In order to ensure battery-grade material, the higher quality carbon raw materials are specifically chosen, formed into blocks, and baked at 700 to 900 degrees Celsius. Once this is achieved, the stock is then graphitized by temperatures of up to 3,200 Celsius to achieve a specific shape and density. This product is then sold between $10,000 to $16,000, more than double the cost of a coated anode spherical graphite material, which retails at around $7,000 a ton due to the fact that it is less energy intensive to produce. Major producers of synthetic graphite is the US, Japan, and China. Looking at cobalt, battery demand has become the single biggest use for cobalt. The limiting factor with cobalt is that it is produced as a byproduct of either nickel or copper, and there are no significant production hubs outside of the DRC. As such, cobalt is vulnerable to supply insecurity. This we will show in the next slide, when in 2008, cobalt prices increased from $11 per pound to $52 per pound on the back of country instability. The other major issue is the lack of transparency in the cobalt supply chain. The DRC output in 2016 accounted for 65% of cobalt mine supply at 69,200 tons. Officially in 2015, the DRC government estimated that 13,700 tons of this was produced by artisanal miners. We believe that this figure could in fact have been higher due to the additional volumes having been acquired and exported by companies like CDM. Substantial volumes have also been stockpiled. We do note that legitimate cobalt as a proportion of the total cobalt is increasing. More stringent global consumer and producer legislation and grade depletion, as well as the fact that the more accessible high-grade reserves are depleting, will likely naturally reduce the artisanal mining sector. The concern is that a cobalt price having increased, profit margin across the entire supply chain will have improved, and artisanal sector will have been incentivized to continue producing. Currently, there are around 100,000 artisanal miners, and this can be adjusted up to 150,000, which will be the case if prices remain at this level. What we note from this slide is that the announced projects that we would consider firm supply is not substantial. Going forward, ENRC is planning to increase its capacity by 20,000 tons, with production expected by December 2018. Katanga can bring between 20 and 30,000 tons, depending on their mine plan, by around June or July next year. Vedanta, KCM, can produce around 3,000 tons, and then there's some marginal capacity increases expected. In total, by the end of 2018, we expect the additional capacity to be somewhere between 50 and 55,000 tons, depending on what efficiencies can be gained by existing producers. Around 20% of this is lost in the refining process. In terms of cobalt demand for auto batteries, we predict that this market will necessitate around 17% of cobalt supply. The lack of significant alternatives to the DRC has been a point of consternation among battery manufacturers, with many considering other technologies. Most recently, nickel sulfate has come into the spotlight, but this is still a number of years away from full commercialization, which, as we've mentioned, takes a while. While there are calls from the battery manufacturers to increase the supply of cobalt, skepticism among cobalt suppliers is deep-rooted and the industry is relatively conservative, as the battery sector, which is not the traditional sector for cobalt, is seen as an evolving market with a number of potential battery chemistries, some of which do not use cobalt in their cathodes. Finally, looking at lithium, lithium is extracted from two sources, brine and hard rock. Brine is found predominantly in South America, with 50% coming from Chile and Argentina. The majority of hard rock lithium is mined from one large mine in Australia, Talison Lithium. This produced 65,000 tons of lithium carbonate equivalent in 2016. Like with cobalt, China does not have any significant commercially viable lithium reserves. There was recently an investment by BYD into the Qinghai Salt Lakes, but this resource, whilst extensive, has complex geology and despite several attempts to get it going, has failed to produce any significant volume so far. As such, China is expected to remain a net importer of lithium for its battery manufacturing facilities. In 1997, SQM changed the lithium market when it commercialized the process of extracting lithium carbonate from brine sources. This relatively cheap resource saw the price of lithium fall by 50%, driving hard rock producers out of the game. However, since then, the lack of expansion from brine resources has meant that the industry has again turned to hard rock potential. To this end, a number of producers have entered the lithium market, including Galaxy Resources and Neo Metals, which have been developing their respective resources since 2009. Pilbara Minerals is the newcomer to the space, which boasts a significant resource and has tied up supply agreements. Canada has pushed exploration, especially in the Quebec region, that has been very supportive of new mining juniors, and the US has been focused on the Clayton Valley in Nevada, and this region used to be a leader in lithium production before the industry moved to Australia and then to South American brines. Other promising resources include clays, and there is also the potential to extract lithium from geothermal brines. Tesla made a play for Symbol Materials, a geothermal brine source, and Bancora Minerals in Mexico is another potential partner of Tesla. However, the automotive industry is looking to invest in lithium sources is not a new concept or unique to Tesla. Back in 2009, when I wrote my first book on the lithium market outlook, we had the likes of Honda and Toyota investing directly into acquiring lithium reserves in order to ensure its supply. Going forward, we are at the cusp of a disruption in the traditional vehicle market. By 2040, France and the UK have committed to going fully electric, and it looks as if China may follow suit. It is unlikely that new cathode material replacing lithium will be used, and lithium batteries are sure to be the beneficiary of this new age of automotives. So just to end off, let us summarize the main points of this discussion. Billions of dollars in capital has been committed to expanding global lithium battery manufacturing capabilities, which should continue to reduce the unit costs of these batteries. The majority of this capacity is in Asia, and due to the relative cost benefits, we expect that Asia will continue to dominate this space. Due to the fact that lithium cathodes is a known and trusted technology, it is unlikely to be usurped in the near term. We predict that new cathodes will be introduced by around 2025, but these will still rely on lithium. China is expected to continue to dominate the anode market due to the relative cost advantage of natural graphite. China does rely on imports for cobalt and lithium, but dominates the cobalt space in terms of refined product. Due to the underdevelopment in cobalt assets, cobalt seems to be the limiting factor of the battery supply chain. Furthermore, despite cries from the cathode producers, there seems to be a deep-rooted skepticism from cobalt producers that additional supply will be needed, given the fact that not all cathodes use cobalt chemistry. Therefore, we would say that it is indeed the limiting factor. Lithium batteries are expected to continue to see demand from electric vehicles, which will become the dominant end users for the market for lithium. Again, I apologize for not being able to make it to Lisbon at this time. However, you are most welcome to get in touch with us about this research or any of our other service offerings. I hope you enjoy the rest of your conference.